And then once I get this, we'll start a discussion here because this is the never-ending, you know, issue that traders have is balancing the desire to make a certain amount of money and actually trade well. Because sometimes we think we're trading well when we have a good outcome, and yet, it could be very obvious that good outcome can come from bad process. It could be something as simple as placing a trade with no plan and just hoping that you make money on it, and then when you make money, you say, "Haha, I've got this figured out," and so over time that could develop into a really bad uh, situation for your trading sustainability, for long-term sustainability and long-term success if we don't realize that right from the beginning. And so it's very important for us to understand, these concepts of what is good process and what is bad process, regardless of the outcome. And so part of the bronze level of our P3 method. So let me just review here what we talk about. When we talk about our trading foundations in copper, we're talking about the actual chart. We're talking about where we should enter, about our technique a little bit, cycles. We're going to evaluate all of this trading and making sure that this process and these principles work. And that's how do we figure out if that actually works and figure out if it's actually profitable? Well, that's why we have the bronze level, to practice the process, to prove the process, and then eventually polish it so that it gets better and better. And so practicing through demo trading and tracking stats, but when it really comes down to it, how do you know if something is going to be consistent? How do you know that you can come and trade your quote unquote process and trust it? How do you trust the process? Well, part of it is knowing that the very foundation of trusting the process is knowing that your process can have a bad outcome. Typically, when you're starting off trading, and I remember this just as much as anyone, when you have a loss, you think that there's something wrong with the strategy, or something wrong with you, or something wrong. Something's wrong. I lost money. Something's got to be wrong. But that's not always, that's not the case, is it? That's really not the case. Here, give me just a second. I just need to grab a drink. Okay. Sorry, my throat was getting, I could tell it was starting to get a little dry. I just had to grab a drink. So the very foundation of trusting the process is knowing that you could have a bad outcome. And if you understand that, hey, you know what, trading well doesn't mean trading profitably all the time. That's going to be that's something I don't know about you guys, but I need to remind myself of all the time, because I didn't start my trading that way. I developed really bad beliefs about I have to have a good outcome all the time. But trading good process and having a bad outcome is good. That's positive. That's good trading. That's successful trading. Trading your process and having a bad outcome. If you trade good process and the result is a bad outcome, but you can honestly say that I did the best I could with the knowledge that I had, the information that I had, and with the skills that I currently possess, and with the trading plan that I'm trading right now, and I had a bad outcome, then I can lift my head, keep my head high, held high today. I could go forward and not beat myself up and not waste a lot of energy, worrying about if I'm going to make it. I could just move on and say, you know what, tomorrow's a new day. I don't have to worry about today. I can forget about it as much as making money. And when I have good process and good outcomes, sometimes it's like, why? How come I don't remember those really awesome days more? It's that loss aversion bias. The loss aversion bias says that you're going to feel the weight of a loss twice as much than the same amount of gain. So if you lose $1,000, you're going to feel that twice as hard as when you make $1,000. The happiness of making $1,000 does not weigh as heavily on your mind, and uh, maybe uh, what's the type the right word for this? Maybe a shock to the emotional charge to your brain, whether it's positive or negative. The positive charge of making $1,000 is half as much as the negative charge of losing $1,000. Does that make sense? So even though we're trading good process, we feel the outcome just naturally. We weigh the outcome differently. What we need to do is find that balance. So here's a little seesaw here. We need to make sure that we feel the weight of good process more than the outcome, right? More than the outcome, whether it's good or bad. So if we get into that habit of really feeling good process was on my side today, despite the bad outcome, then that loss doesn't weigh so much on our emotional stamina and our mental, you know, desires, our mental capacity or tendency is the word, tendency, our mental tendency to try to figure out what was wrong. Because I lost money, I got to figure out what was wrong. And so we use all this energy and brain power and worry and fear that we need to figure this out. Well, not if we traded good process, right? And good process could just be, you know, I, woke up and I saw the chart. I followed my indicators, my moving average, and I got in when I should, and I got out where I should, and I took my loss where I should. Boom, that's good process. But maybe that process needs to be improved, and that comes with the analytical side of the proving the process, right? Proving, through statistics and keeping track of our stats and things like that. But the psychology behind trading, trusting the process, the psychology behind trusting the process is we don't want a loss to outweigh a good outcome if the process was followed the same way. So Monday I traded my process, good process. Tuesday I traded my process, good outcome. So Monday was good process, good outcome. Tuesday was good process, good outcome. Wednesday was good process, bad outcome. Let's say Thursday was bad process, bad outcome. And then I had a Friday, another good process, good outcome. So these, I could just say, great, just continue to repeat that. This feels, do I need to, it should feel the same. This feels the same. Good process, bad outcome should feel the same. However, if we have multiple good process, bad outcomes, then we need to identify that. This is how we identify whether or not our process needs to be adjusted, right? If we continue to have bad outcome with what we think is good process, then if we get multiple of these and we say, well, maybe I need to adjust my process a bit. If I'm identifying that I'm following my process and it's not profitable, then I need to make some adjustment. I need to tighten up my stops or let my winners run a little bit, or refine my entries, right? That's where it comes. That's how you figure that out. Okay. Now, if you have multiple of these bad processes, bad outcomes, and then if you can identify some of these times where you have bad process, good outcome, you can say, well, I just got lucky with the good outcome. That's healthy to be able to recognize that. But it's dangerous if you don't, like I have here in the notes. It's by far the most dangerous types of trades, because if you have a good or great outcome based on something that you can't repeat, maybe you acknowledge that there was a little bit of luck, and maybe you were on the right side of the news, and what's the word? The slippage was on your side, and you made a lot more than you normally would. That wasn't part of the process, but I had a good outcome. As long as you recognize that, there's no harm. But if you're not recognizing that, aha, I made a great outcome and I'm such a great trader, if you're thinking that you got a good outcome because you're a great trader, but when it really wasn't, that's very dangerous, right? That's very dangerous. You'll solidify bad habits that will cause destruction to your trading down the road. Okay, that's very important to recognize. And so when it comes to good process, it's like this note right here. This note says, it should be noted that bad process doesn't equate to bad strategy. Oh, well, that's this right here. Not good process right here. Bad process. Bad process doesn't mean it's bad strategy. Okay. You can have the best strategy that produces really good outcome and sometimes produces bad outcome. But bad process means I'm not trading my strategy. I'm not executing. Maybe my execution was lazy, casual, apathetic. It was too aggressive, too emotional. And today my strategy fell apart because of me, not because of the strategy. I got in too much too soon. I revenge traded. I traded too much after, feeling very emotional, et cetera, et cetera. Right? And then the good trading process is the fact that you've developed a profitable strategy, you're executing properly, you're following your routine, you have analysis afterwards, telling, plot trading and tracking your stats and all of that. That's good process. Okay. That's what good process means. That's the definition of it. Okay. So hopefully that is a good review of what we're talking about when it's good process versus bad process. So the question that has been posed to me here recently is, well, when I abandoned my process, when I abandoned my strategy, everything becomes distorted. So what do I do to prevent the distortion, right? What do I do to prevent myself from deviating from good process? Because we could talk about it till we're blue in the face. We know what we need to do. We need to trade good process, whether it's good or bad outcome. We need to be this type of trader. We need to just be good, you know, focus on the process rather than the outcome. Now, obviously, we have balances where we need to look at the outcome. Let's look at this thing right here. Is it this one or this one? It's this one right here that we talked about on Tuesday. So we have a desired outcome right here. Okay, we have a desired outcome. Maybe let's make this purple. Yeah, purple's good. But when we try to force it, we have a desired outcome, but when we try to force it, sometimes we are on the right track. Our trading is on the right track. But something happens where it gets off track. And if we don't identify that we're off track, the market can be turning and our accounts can be turning, but our focus, our eyes are still on the desired outcome, on the destination. We could be moving farther and farther and farther away from it, but we still have our focus on the outcome. That's why we make such big losses at times. That's why losses come and sneak up on you and you crash and you burn. Why? Because your focus is so much on the desired outcome that when the market is turning and your strategy says to get out, but you don't see it, because your focus is on the outcome. If your focus is on the process, which in my method is to protect your capital and focus your process, your process immediately says, well, I'm going off track here. We're changing direction. My outcome's over here. I obviously am pointed towards my outcome, but if I follow my process, but the trade tracks of my process will take me to my outcome. But if the process starts to turn, the process also says where I'm wrong. The process says the track is no longer on to the outcome. It's no longer going towards that $500 that I want to make today, or $50 or $100, whatever it is, or $5,000. We have in our mind, this is how much I want to make today. If we're trying to force the outcome, it doesn't matter where the market's going and where the process is going. We're just looking at that outcome. And a lot of times, this process will go right off a cliff or will crash against another train coming down that track. And because we weren't paying attention with what was actually going on the track, because we kept our eyes, it's like it's like uh, it's like one of those gyrospheres where the outside part of the plastic or the ball is moving, but the inside stays the same. You know, it's got that weighted. Uh, I don't know if you guys know what I'm talking about. I could see it in my mind. It's like on that Jurassic World movie, and I've got a little BB-8 thing that it stays upright even though it's moving. It's got a little head that stays in the same direction. And so the train could be switching tracks and then going in the opposite direction, but we swivel our head to stay in line with our desired outcome, and that's forcing the outcome. So we want that outcome, and no amount of turning is gonna keep me away from my outcome. But that's a fool's errand, because the train could go off the cliff, or maybe the train's not finished yet, or it stops, and we're just like, come on, get to that outcome. But it's like, well, the process, we're out of gas, or out of momentum, and it's off track. So the question is, how do I not deviate from the process? How do I deviate? I mean, how do I not deviate from my process and not focus so much on outcome? Well, here are some red flags. You know, if you start moving your stops away, I don't know if you can see this. I may have to zoom in. Let's zoom in. Yeah. So we'll go through some of these. So these are some of the red flags that we've talked about. If you start moving your stops away from where they should be, you know, you're just like, oh, I'll just move away here a little bit. If you start over trading, maybe you over leverage because, oh, well, you know, I got to catch that bounce. So I'm going to put on more trades than I normally do and just catch that bounce. If you start getting emotional, you know, you start pounding the keyboard. If you start saying out loud, like, are you kidding me? Oh, I'm such a loser. Oh, why did I take that trade? Oh, that was a horrible entry. What am I doing? Or you start thinking, I hope it comes back, and I start smoking the hopium, right? They call it hopium. I hope it comes back. Sometimes you start thinking, well, I should get out. I should get out. I should just bail. This is the chance for me to bail. And it's not based off of like fear. It's based on the chart saying the chart's telling me to get out. It's stalling. The momentum's stalling here. But then you don't. Right? Those are some of the red flags that we run into. Okay. Other things that happened when we abandoned process are right here. We talked about this Tuesday. Sometimes it's laziness. I don't feel like, I'll just trade, see how we do. I don't feel like doing my routine, you know. Maybe it's fatigue. Oh, I'm so tired, you know. I this is a big one for me, fatigue. Sometimes just a lapse in judgment. Sometimes we're just human. We just make mistakes. We forget we're human. That's what's part of you're gonna abandon your process occasionally. Just accept that fact. Unless you're really, really obsessive compulsive about your trading. And some people are. But then that type of personality is kind of perfectionistic, and that's not a good mix with trading, because then they try to be perfect with the outcome too. Ed says, it becomes a struggle. I get out or take a break for me or the market to adjust. That's right. So that's one of the ways that we can stay on track, right? So here is the question: when I bend process and attempts to force the outcomes, and you get into this state of tunnel vision and distortion, where everything around you confirms what your bias is. So when you're focused on your outcome, your confirmation bias part of your brain kicks in, meaning that your brain goes and searches every reason why you're going to make that outcome. You want that outcome so bad that you're going to find every reason why it's going to work because you're going to control that outcome. I want it so bad that I'm going to control it. I want this money. I want it now. And there's nothing anybody can do or say about it. I'm going to get it. Now, in some professions, that is a great attitude to have. That's a go-getter, persistent, you know, tenacious grit that you need, to make stuff happen. But in trading, not so much. In trading, it doesn't work that way. We can't force it. Okay. So how do we overcome that confirmation bias? That happens when we abandon process and bring ourselves back to process trading. So that's what this is right here. We need some sort of, we have triggers, red flags or emotional triggers that put us into outcome mode. How do we trigger ourselves back to process? When we deviate out of process and go to outcome, how do we bring ourselves out of outcome? Ed said a couple of things. Get out of the market, take a break. Wait for the market to adjust. Wait for something else, right? It could be as simple as reread your trading plan. It could be something like reviewing your plot trades of the days you did really poorly because you deviated from your process. It's revisiting the pain. If we want to go on a deeper level now, revisit the pain of not following your process. How great was that? How great did that feel when you lost a ton of money when you didn't follow your process? Yeah, that didn't feel so great. Okay, well, use that pain, use that memory to help you, to motivate you to get back to process. Because if I follow the process, I'm less likely to feel greater pain. Okay, so there's some sort of triggers, objective, behavioral, process, things that we could do to bring us back. Take a break. Say words. Words are very powerful. Words have a frequency. Say words that calm the nerves. Hey, it's going to be okay. If I lose here, it's fine. I'm going to be fine. Everything's cool. I'm going to follow the process and I'm going to be better off, right? Know your break even. Know when you're getting into a pickle. Become more conscious of your emotions. Have decision points. Develop decision points in your trading plan that are already made. It's basically, the trade track. You know what track you're on, and then if it deviates, you say, okay, I know these tracks are going to deviate here potentially. Then if the market doesn't do this, it's going to go off here, and I need to stop out. And it might go off here, and if that's the case, I still have a chance of getting back on track. But that needs to happen, and if it doesn't, then I need to get out here. Right? You have decision points that are objectively just like someone on a trade track. There's this movie called, what was it called? It's with Denzel Washington and Chris Pine. Unstoppable. I think it's based on a true story in Philadelphia or thereabouts, where a trade got, somebody was putting a big trade that with a whole bunch of chemical stuff on a different track, but the dude got off the train and switched the track, and he was too slow to get back on, and then it ended up being a runaway train. And they had all these parts where it's like, okay, if it gets to this point, it's going to derail and it's gonna spill all these chemicals and affect all these people. So we have other we have decision points that we can make up to that point. And we have a fail-safe. We have, we could try to derail the trade before it gets there. And even that didn't work at one point. But the point is that in any other profession, we do the same thing. You have, if this happens, we're going to do this. If this happens, we're going to do that. We should do the same thing in our trading. If the market does this, I'm going to do this. If the market does that, I'm going to do that. Okay. And having those decision points already made will help us be more process-based rather than outcome, because the decision points help us have the right outcome, because that's what we practice, right? So the other thing that I have found in my trading to help me stay away from forced outcome trading is to ask myself, what if I'm wrong? And not just on the chart. Like I get into a trade and say, okay, where am I wrong here on the chart, right? Where is this trade going off track? Where is it like, oh, warning, warning, off track. You need to get out. That's one concept of the what if I'm wrong. The other concept of what if I'm wrong is, what pain am I going to feel if I'm wrong here? If I'm going for a certain amount of outcome, I'm going for, say, $300. What if I'm wrong? What if I lose $600? What if I lose $1,200? I lose 4 times what I wanted to make. How is that going to make me feel? Uh, that's going to make me feel really crappy. And I've felt that way before, and I don't want to feel that way again. So you know what? I'm just going to trade my process. I'm going to put that burden on my process, because my process says I'm only going to lose 600 if I lose anything today. I'm going for 300, I'm going to lose 600, right? Or vice versa, whatever it is. You decide how much you're going to lose with your process, and your risk rules and your discipline to your risk helps you follow that process, because you don't want to feel that pain. So asking yourself, what if I'm wrong, is many dimensions, multidimensional. It's, what if I'm wrong on the chart? What decisions do I make? What decisions do I do? And what if I'm wrong in my outcome desires? What if I'm forcing my outcome and I'm actually wrong and I lose a ton of money? Well, you know what? I better not do that. So just asking myself that question, folks, that I've beat a dead horse week after week, month after month, year after year, since I've developed my P3 method. Just asking yourself, what if I'm wrong? I tell you what, that would have saved me a lot of heartache and sorrow in the early years of my trading, just asking myself that, because I felt like I could control the outcome. I felt like my analysis, if I got good enough with my analysis, I could predict where the market was going to go. And then I could predict my outcome. And man, did that cause a lot of trouble for my mentality, for my mental stamina, and for my financial account. Okay. So just asking yourself, if I'm wrong, will do wonders to the way you view your trading. And the confirmation bias will diminish. I mean, it won't go away completely, but it'll diminish. You'll still have your outcome, but it'll be balanced. You'll say, this is the realistic goal that I have if I trade my process. And if I am wrong today, then I'm going to lose, but I'm going to go for these particular targets that are repeatable, consistent, realistic. And I'm going to recognize that I'm never really in control. And if that's the case, I need to be able to recognize, if I'm not in control, when do I bail? When do I get out of here? And that diminishes that confirmation bias a lot, because then you start asking, well, if I'm long here and I want it to go long, instead of seeing the market go long and then all of a sudden it reverses, we look for all the reasons why it's going to go back, instead of looking for the reason why, momentum is increasing, it's breaking all these lows, and there's a good chance it's going to keep on going down. Now, that may not always be the case. There may be some objective reason why that was just a black swan event, or maybe that was something that that was a knee-jerk reaction to news or something like that. But if we're trading by process, and then we say, okay, well, we think the market's going to go up, and I'm really excited for that outcome, but if I'm wrong, and the market breaks this, then breaks this level, or makes this turn, or does something objectively that says, I didn't want this to happen, but it did happen. And the decision is to get out. The right thing to do is to get out. That's process-based trading. Rather than, oh, I want that outcome, so I'm gonna sit here and I'm gonna continue to look at that outcome. I'm gonna try to force it, and then before you know it, you're down 3, 4 times as much as what you want to make, and then the pain of that is so high. It's like, oh well, now I have to get out because I can't lose any more than that, because that's twice as much as what I'm normally, willing to lose. You see how, and then picking up the pieces off of, from that perspective, picking up the pieces from, mentally and emotionally after, because you didn't even realize it. You didn't even realize it because you were so focused on that outcome, right? What was that? I just got a trade alert. Oh, well, that's very nice. Sorry, just gonna check here. Very nice indeed. Okay. Okay. Let's see, where am I? Where was I? Sorry, I just had to check that trade. I got an alert there. In the book Quit, when to walk away ducks, Eddie Duke talks about that stop line in detail. That's really good. Thanks for sharing that, Ed. I put that in my wish list. Okay, is this discussion helpful? Is this making sense? So the question is how well do I stick to my process? How often do I get into outcome trading? Because it's not whether or not you do. It's you do. All of us do get get into this trading outcome. So the question is, what helps you not get into outcomes? Some people turn off their P&L, right? Some people completely turn it off. Like some of you see my Thinkorswim, I have the profit and loss on there. That doesn't bother me as much because I am focused on the chart. I'm focused on outcome. Um, and that does kind of actually help me sometimes because if it's negative, it can like, oh, okay, well, what's wrong? Because I want to make sure my entries are good. I want to see green. And if I don't see green, then, then I'm like, oh, I probably need to get out of this thing. So it's part of my process to see that now. Um, but some people say turn it all off. Don't be outcome trading at all. Just turn it off. For me, I find that having some of that concept of outcome, I don't want to have too bad of an outcome that makes me frustrated to trade the next day or makes me, hate my life. I want to be able to turn that off quick, right? But what are some other things that you folks use to stay in good process mode? Have you thought about that? Maybe you should ask yourself that question. Do I even know? Do I even recognize when I get into the state of tunnel vision, right? That's why this question was so great, because just recognizing it is showing trading maturity. Just recognizing, having this state of recognition that uh, I do get into this. I do get distorted mode. I do have confirmation bias. And I see everything on the chart as confirmation of that I'm right. When I start getting into that, that's actually a red flag for me. When I start seeing everything as, hey, I'm right. Everybody says the same thing. I listen to this guy and I listen to this guy, and I see this indicator, I see this person, this indicator's all in the same direction that I am. Just that kind of raises a red flag for me. It's like, okay, well, what if I'm wrong? Because isn't that the key sign that as soon as you get into a trade, it goes against you because everyone is looking at the same thing that you're looking at. And so everyone must be thinking that it's going to go up, but then there wouldn't be any markets of any kind. And if everyone thought the every time you got into a trade and you say, I'm going to go long, I'm buying this pair or I'm buying this market, and it's obvious that it's a buy, why can't anybody else see it? Well, if it was so obvious that it was a buy, then the price would skyrocket. There would be no sell orders. There would be no one willing to sell, and the price would be going up so high that it'd be so fast if everyone thought that it was going to go up. That means just by nature of the market, there are other people and probably more of a majority of people that think differently than you do, that think it's actually going to go down instead of go long. So when it is the case where you go long and you're so convinced that you're going long and it goes against you, that means that a lot more people or a lot more money is, and that really could be the case. Maybe not more people, it's just really a lot more money. And people that have a lot more money to feel differently than you, right? Hey, thanks, Ed. Thanks for jumping in. So he says, my system tries to teach to get into the trades early with the indicators. That's good. That's very good. Holy cow. You know what's frustrating? When you get into trades and have a certain target, and because you over leveraged a little bit or got in a little bit too early, you had to stop yourself out. And now that market just hit your target. See, I still have to deal with it too. Can you believe it? Can you believe it? Unbelievable. That's just awesome. I mean, it's great that I was right, but I lost money. Don't you love those days? Don't you love those days? I try to avoid those days like the plague, right? When you're right on your analysis, but you lose money. I'd rather be wrong and make money. But today was one of those days where I was right. But I got stopped out before I could hold on and wait for the bounce. So I'm feeling the frustration welling inside me. I feel like the Emperor on Return of the Jedi on Star Wars. I can feel your anger. Strike me down. I can feel the anger welling inside me, but I'm gonna just let it go. I'm gonna say, you know what? Okay, I'm angry about it. That's fine. I understand why I'm angry. I'm angry at myself for bad process, really. I should have waited. I should have waited. Henry says, Kevin, let me know if this is good practice or not. I usually focus on my daily return. Once it gets to 2.5, I cut it off. That's good process because that's a risk rule, right? That's built into your risk. So for me, in some cases, on some days, I really don't know what the market's doing, or it's not a clear setup or something, but I can say, this is how much I'm willing to risk today. And as long as I stay within that, anything goes. Anything goes. I could trade off an indicator. I could not trade off an indicator. I could gamble. Sometimes I feel like I'm in a gambling mood. That's really not good, obviously. But if I stick to my risk rules, that's number one. That's number one rule is protect your capital, isn't it? So, in my opinion, that's why having that as the priority, and then you see that, okay, well, I'm going to claim that that's good process, but I keep getting bad outcome. Maybe I need to reduce the amount of gambling. Maybe I need to reduce the amount of like getting in like with a ton right at the beginning. Maybe I should have given myself a little bit of space, or maybe my entry should have been a little bit better. You see what I mean? But if you're watching that 2.5% and that allows you to trade more freely and more consistently profitable over time, then I don't see anything wrong with that. Because there are some people that are more discretionary than mechanical. That's just part of the world we live in. They're aggressive, intuitive traders that don't really follow a step-by-step mechanical system. And there's some of us that need to be following a system. And some of us need to have a system that we aggressively follow. And some people are more, intuitively following their system, right? But everyone needs to have that risk rule. Everyone needs to have that cutoff point, that circuit breaker for themselves. And that is the starting point, I think, of a good process, is knowing your maximum risk, is your protect capital, is knowing right here, pro traders take their losses where and when they should. That is the starting point. That really is the key. When you can manage and control your losses, that is the start of a good process. I don't know if it'll be profitable over time. That's yet to be determined. But again, if you start off with that cutoff and then you just trade your account on the outcome, personally, I think that's a good start. So that's just my opinion. I could be wrong. Some people are like, no, that's dumb. Anyway, well, I just got hit with an alert. That's good. Okay, fantastic. Very good. I exceeded my outcome goal for that particular account. That's really the most important account that I have right now. So I am pleased with that, despite how my two challenges went. My Lark and my EA did not do well today, but when it really comes down to it, if I'm trading well in my main accounts that provide income for my family, I cannot complain about how anything else goes. Even though I complain a lot. All right, well, I'm going to leave you with that. That is, I think, a great discussion. That 45 minutes went by super fast. That's when you know that you're on a good thread of discussion and a good topic that me personally, I need to hear. I need to hear that. I need to follow this a lot more closely. Trading a good process and not allowing bad process to overwhelm my good trading practices. So Henry says, so what email address? I have like 3 email addresses I check now. Okay, let me check it really quick. Oh, I see it now. Okay. Yep, I didn't check this email. This one I check. I don't check as often. I should have them all up. Yes, there is actually, Henry. Let me actually show you this. I'll have to pull up my 8-cap minute trader. There's an expert advisor here. Let me share this screen. Jerry, one of our trading buddies, he found this expert advisor one-click order, kind of like what Alveo has, right? So this is what it is. And then on some of my charts, I have it here. It says, once you have it in your folder, so here, let me get opening the data folder. And you go into experts, I think. Yeah. So take this file that I just posted in the chat, take that file and put it into when you have your MetaTrader 4 up, click on the file and then open data folder, and then go into MLQ4 folder. That's where you have your indicators and your experts and your scripts. And then click on experts and then put that file into your experts, close down your MetaTrader 4, and then reload it. And then it should show up right here. And then once you see it, pull it over, click on it, and hold it onto your chart. And then it should show up over here. Now, if it has a frowny face, it's not working. And right here, you see these things right here? Those are the one-click trading that have the preset stops and targets like Alveo can. This little sell and buy is as if Alveo had the 0 target, 0 stop loss. So this little sell and buy on your MetaTrader 4 just comes naturally. But if you have these, it'll do your preset. Now, what you need to do is you need to make sure that your auto trading is on for that chart. And I can't remember what else, if there was anything else, to be honest. But once you have that, and then it has a smiley face, just click the smiley face, and then it pulls up your things here. And then his preset to 2 pips profit, 35 pips stop loss, which is the wobble, Sean's wobble. And then the lot size is at 0.02, and you just double click and you could change it to whatever you want. So 0.25, and then I could click OK, and then it'll put, on this market. This market, 2 pips is like, 2 cents. So you have to do like 200 on this, or like 2,000 for the NASDAQ, for some of the CFDs. So anyway, but anyway, it works fine on the pairs here. Okay. So yeah, download that. Let me know if you have any trouble. Okay, well, I'm going to sign off. That was a really good discussion regarding process and outcome, and just a good overall, in my opinion, just a good reminder of where we should be at. And there's nothing wrong with trading outcome. There just has to be that balance, and knowing that you're not forcing it and focusing on it so much that you can't tell that you're going completely off track. And your trade is going a complete different direction now. And sometimes it's like, well, it's going against me, but it's still going to get there because I'm focused on it so hard, and I'm not gonna take my eyes off that outcome. That's very dangerous, and we don't do that consciously. We don't say it out loud, but it could be very, very, very dangerous. So, all right, folks. Hope you have a great rest of your day. Great discussion. Thanks for joining me. I hope all of you are doing well, trading well. If you're not and you're struggling, don't struggle alone. The struggle is good. The struggle will help you become a better trader if you strive to overcome it the right way and have a good growth mindset. But you don't have to struggle alone. That's what a trading community like this is for. That's what it's for. So, and that's what my trading buddy system is set up to be. It's like, hey, we're a buddy system. We're doing it together. We're hiking this trail together, not trying to do it alone. So then we're less likely to get lost, or if we get injured, we could have someone there to help us. Because I've had many a trading years, trading alone, as if I was hiking alone and I got injured. And it took me a long time to get back and to get back to the trailhead, so to speak, to get back to the hospital and heal. But if I had someone there helping me, I would have had a better perspective, and I would have been able to either complete the hike, or I would have had someone helping me get down the mountain faster to heal up. And it took me months to really figure out what was going on inside my own head. And then when I finally realized that, I forgave myself and stopped holding a grudge. And then I was back to normal. It's like, man, I could have done that the day after. It was that simple to just let it go, to learn from it and let go. But I took 7, 8 months after a big loss to overcome it. Anyway. Okay, I'll let you go. Thanks for letting me talk the whole time and talk your ears off. Hope there was some value found today, and if so, do something about it. All right, there's knowing and not doing is the same as not knowing. So, okay, thanks everybody. We'll talk to you again very soon. Take care.